Ladies and gentlemen, good day and welcome to MSTC Ltd Q4 and FY22 earnings conference call hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dipesh Kashyap from Equirus Securities. Thank you, and over to you, Mr. Kashyap.
Yeah, thank you, Nirav. Hello, everyone. On behalf of Equirus Securities, I welcome you all to 4Q and FY22 earnings conference call of MSTC Ltd. From the management, we have with us Mr. Surinder Kumar Gupta, Chairman and Managing Director, Ms. Bhanu Kumar, Director Commercial, Mr. Subrata Sarkar, Director Finance, and Mr. Ajay Kumar Rai, Company Secretary. We'll begin the call with the opening remarks from the management and then we can open the lines for Q&A. I now hand over the call to Mr. Surinder Kumar. Over to you, sir.
Yeah, good morning, everybody. You see, we have done quite well as compared to last year. We have basically three big companies, MSTC, FSNL, and our joint venture company, MMRPL. All three companies have made record profits. MMRPL, which was at loss, has made a token profit this year. FSNL has made record profit, and MSTC has also achieved all-time high profit. If we see the standalone financial performance, we have a revenue from operation net. After deducting the purchases, we have a growth of around 23% over last year. Total income rising by 30%. PAT rising by around 90%. PBT rising by 90%, and profit after tax is almost double. It has risen by 98%. When we talk about the consolidated performance, again the profit have increased. Profit before tax has increased by 71%. And profit after tax has increased by around 76%. So there is a robust performance, and our earning per share, EPS, has almost increased from 14 to 28 on standalone basis. So that's a double of the last year, almost double, in the same proportion as the basically profit after tax. And for the consolidate also, the EPS has taken a big leap. Now, FSNL is doing very good. As the steel production of our ISPs are increasing, FSNL is also increasing its revenue. There is another positive development. There is a plant which is going to be operational in current financial year. It's a NMDC plant at Nagarnoil. So that will be operational. We have got the contract for the slag operations for that plant. That will be a good revenue projections in the current year and next financial year as far as the FSNL is concerned. Nevertheless, I would also say that the process for disinvestment is at advanced stage and EOI has already been issued and it is due sometime in June. So DIPAM is working hard and we are also working for strategic disinvestment of the FSNL. In MMRPL, we had three plants which were operational and every plant has got good returns. North has already released the policies. States have yet to implement those policies, that the policy which has been issued by the North, and we are in active engagement with the state government for early issue of the policy, and we are setting up further plants and targeting to complete 4 or 5 plants in the current financial year. As far as MSTC is concerned, we have a growth in volume also, and more than volume, we have a very, very robust growth in e-commerce income. So we have increased the e-commerce income from 202.77 crore to 264 crore. So that's quite a jump. And this there is another thing that quarter to quarter also we have a better performance in current financial year. So the growth is robust. The reason for the growth is one factor is apart from the increase in volumes. There has been a good price for the iron ore. The segment-wise iron ore has given us quite a good jump in profit. Similarly, the scrap sale has also given us a good jump. And overall, the business, we are diversifying into all kinds of e-commerce areas. In the current year, minerals will be one major source of income. Most of them, as per the central government policies, all major minerals, various state governments are giving work to us. As per the mandate of the center, they have to mandatorily sell their mineral blocks through MSTC portal only. So now those portals are coming. And as we are engaging with the state government, so we are trying for the sale of their minor mineral also. Apart from the mineral blocks, we are also proactively engaging with the parties who have bought the mineral blocks, so that for selling their minor mineral also. So for an iron ore, we have got good success, and we are making efforts for replicating that kind of success for other minerals also. So overall, the business prospects are good. That's what commodity prices, of course, have helped us, but that's not the only reason. Our volumes have, in absolute terms, have increased, and we have diversified our bouquet of services to new areas. So that's all in nutshell about the company. Our Director Commercial will further elaborate about the business operations, and Director of Finance will take you to the main financials. Thank you.
Good afternoon all. I am Mrs. Bhanu Kumar, Director Commercial of MSTC Ltd. More or less our CMD has given a broad overview of what has been the performance and the key factors that helped us achieve this grand performance. Now, the helping factors apart from the commodity prices is the scrap sale volume that we have been handling. That has also gone up. Not just the prices, the volume has gone up. So here I would like to highlight that we have sold a very old power plant in Chhattisgarh that brought us some good revenue. Then we also diversified into other products, not just the iron ore and chrome ore and all those minerals. Now we are going to sell gypsum for NTPC and probably other power utilities. That was the first time we started for NTPC, and that has been met with very grand success. So going forward, the volumes are likely to increase. Apart from that, the government's trust for disinvestment of various units of 6 PSUs is also helping us. That is where the volumes are coming up. So inventory items of 2000 India Limited, that has also been sold off in the last year. Apart from that, there are a few power plants which have been lined up, which have been sold in the recent past, but that will actually materialize in the current financial year. Then in the property segment also, we are making good inroads, not just for the NPAs of the banking sector, but also for various state governments and central government. Our property portal is having a very robust growth. Then in a very small way, we started off last year with liquor license auctions for Rajasthan. So we have been engaging with the excise department of various governments. So in Bihar, where e-commerce is definitely a non-starter, there the excise department called us and they asked us to auction off the confiscated vehicles. So that is again, though it is a very small volume, but the kind of
ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्ड.
Hello.
Shyam, go ahead. You're audible.
Yeah. So that's a small beginning for the government of Bihar. So we expect that more such units will come to us for auctioning of their scrap and confiscated goods. Then pond ash, fly ash we have been selling all across the country for many years. Pond ash and other kind of waste material which can be used by the cement industries and other infrastructure projects. That also we are able to sell, and these are very customized models. It is not that normal auctioning process takes place. So there also our clients have seen a lot of benefit on our portal. As we said, our focus is now going to be the sale of minerals, that is mined from all the mineral blocks that have been auctioned in the recent past. So we are tapping that potential. We see a huge potential, and we are approaching all the successful bidders who have got those blocks. And going forward, we will be able to sell. And from the private sector, we are getting very good response. So that is something very commendable for us. And these are the key highlights of last year's performance. So going forward, we expect that this kind of growth can be expected in the near future also. The market is still good. Thank you.
Good morning, everybody. After Indika has given a quite snapshot of our financial performance, I will just give some highlights. So if you look at our standalone financial performance, it is just double from the PBT is just double from 114.68 crore to 220 crore, and the PAT is again just double from 101.07 crore to 200 crore. And if you look at this consolidated basis, here also the almost replica from PBT is up by 70% from 135.88 to 232.93, and profit after tax is also up by 76.29% from 102.95 to 119.13. And on the balance sheet front, if you can see, this year we have in the standalone balance sheet front, we have already very good current ratio. With this, I will now hand over for the further questions.
I'll just add to the key highlights. If you go through our performance and the financials, you can see that our trading business, we have tapered off, which we have been emphasizing in the last couple of conversations. And this year, we have done some provisioning, but that we hope is the last tranche of provisioning, and going forward, there will be no provisioning required in this segment of business.
Thank you, and for the handing over to you for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Ritesh Chheda from Lucky Investment Managers. Please go ahead.
So thank you for the opportunity. My question is on the e-commerce segment. Within this, if you could give us what is the scrap sales business and what kind of volume growth and value growth did you see in that scrap sale?
Okay. In terms of volume as well as in terms of revenue, we have seen a growth of about 34% year-on-year growth. I'm talking of 2021 and 2021.
Yeah. I want year-on-year only. Okay.
Yeah. So it is 34%.
And what is the value of scrap sales business?
We don't have those numbers exactly, but it will be in the range of about 5,000-6,000 crores.
That will be the value, right? So in that you will get your commission.
That is the value, yeah.
In that, what would be your commission?
If you talk about total e-commerce revenue, the percentage of scrap revenue is between 45 to 50%.
So basically about 140 crores, which would have grown at about 35%, right?
Yeah.
Now, this business, what kind of growth visibility do you have in the forthcoming year? And when you mentioned about focuses on sale of minerals from the mining block auctioned by the government, so this mineral will be a e-procurement, e-tender type of business, or it will be a type of transactional based business?
We call it e-sale business. All the mined minerals that is auctioned off through our portal, and that is a very different kind of model compared to the scrap, where we go for price and quantity bidding.
So it will be a fixed.
It's not a fixed price sale. It is an auction. It's a normal auction.
So you will get a percentage, or you will get a fixed fee per auction?
We have both the models. It depends on what is the kind of services that the client takes from us. We will try for percentage model.
Okay. So do you expect the e-com business as a sum total to grow for us in the forthcoming year?
Yeah, definitely. We are hoping that it will go up. Whatever the volumes we have shown here, about 1,34,000 crores, we are saying is the volume of e-commerce transactions that has happened through our portal. So going forward, we expect that it will be more than this.
Any growth number you want to mention that you will grow a certain extent?
That may not be possible because we have a basket of products. So something may go down and something may go up.
Okay. My second question is, ma'am, with respect to the entries in P&L, I could understand the provision which we have taken, but usually what this other income arises on account of?
Yeah, that our
other income, basically, if you see that you are talking about a big figure.
Yeah, I can understand the provision number, but how does the other income arise?
But this other income is nothing. It's a book entry because we have written off a provision of around 200 crores, 200 plus crores.
Okay.
It is appearing both sides.
Okay.
It's a null effect on the P&L.
Perfect. Understood.
And that is affecting our P&L.
Perfect. I understood, sir. So basically, net there is no provision because you have taken a write back and there is a write off. So net the provision is a difference of that number.
Yeah, that is the provision. That is the net of the provision.
And the tax rate, what would be your incremental tax rate now? Will you go to 25% tax rate from next year, or still lower number only?
We have certain credits, tax credits. So we still do not want to go to new regime until that is availed of.
Okay.
For that, we already have declared in the note that we are continuing with the old regime only.
So your tax rate will be what for next year?
944. That is the tax rate.
Sorry?
That is the tax old regime rate. Old regime rate 30 plus surcharge and that is the old regime rate, not at the new regime rate.
But when I look at your P&L, even last year the expense out was 15%. You have some credit, and what would the net?
Yeah. Basically, if you see that it's the base tax rate, but we have got certain credits and exemptions. Okay, for that only we are sticking to this old regime rate. Okay, and we have got certain net credits also. So to exhaust that, we are still sitting on that old credit rate. That's why our net effective rate comes down heavily.
So will the net effective rate next year will also be 15-20%?
We cannot comment right now what will be our income and what will be the circumstances, what type of income we will derive. So it's very difficult to tell all these things, but we will try to take maximum amount of tax planning that is available as per the law in India. That much we can do.
And my last question is, when will that segment of scrap recovery and sales not start reflecting for us? We've already done the transaction, so.
That scrap recovery and that pertains in the console account of because of our Ferro Scrap Nigam Limited. Okay, and as our PhD sir has already pointed out, that the process of disinvestment has already started. UI has already been floated. So it all depends upon when that whole procedure comes to an end. So when
you sold it a couple of quarters back, is what the communication you had given, or it is yet to sell? You had mentioned, right, about 100 crores.
Yet to be. The process of sale has already started. Process of sale already been started. but yet to be culminate into the actual the transaction, financial transaction.
Okay. Thank you very much, sir.
Welcome.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Dixit Doshi from Whitestone Financial. Please go ahead.
Yeah, thanks for the opportunity. First question is regarding the trading business. So you mentioned that, as per promise, you have tapered down. So will the trading business remain next year also, or there will be no revenue and segment from trading business?
Actually, in trading, we had 3 different models. So 2 of those models we have discontinued completely. So there will be no transaction under those 2 models. One model where we do procurement for our clients backed by 110% BG. That is still there because it's quite a safe model. And in that, of course, the transactions are not to the extent of what we had expected earlier. They are minuscule. There will be some small income, but not very significant.
Okay, and net there also we will not lose money. I mean,
No.
1 or 2% margin will be there, or at least it will be up.
Yes, absolutely right.
Okay. Now my second question is regarding, there is one notes to accounts regarding that Standard Chartered case, where you have mentioned that 143 crore is shown in the loan, which is in the short-term loan, and it is also shown in the receivable. So this 408 crore of receivable in the standalone balance sheet, that includes this 143 crore. Is it right?
Yeah. Basically, you see what has happened. It is in the gross proposition. 403 is a net of provision. We have already made provision for that 147 crore in the books of accounts. Okay. But gross stands in our books of accounts in a gross manner. It stands in our books of accounts.
Okay. So now this 408 crore, can you give the breakup of this receivable in terms of?
Basically, 408 crore is more than 50% is backed by 110% BG. So around 200 plus crores is of our BG business. So it is totally secured by 110% BG amount. And for the sticky part, we have already made all the provisions, and the balance is basically more or less from e-commerce and associate model, which are of course quite safe. So if you look at that provisioning part, we are done away with most of the provisioning part.
So you mentioned 200 crore from the trading receivable of 110%
200 plus crore from the trading, yes.
Yeah, and there will be some from associate model also?
Yeah. So that is also a safe and secure because it is backed by the creditor's guarantee and
how much
and
would
the
that
e-commerce. Pardon?
How much that would be, approx amount?
That will be around 100 crores and around the balance will be from our e-commerce business.
Okay.
So both are safe and both do not require any major provisioning in the coming years that we can foresee.
Okay. So e-commerce receivable is around 100 crore only.
Around. It will be around. Whether it is less than 100 crore.
Okay. And my last question is regarding this e-commerce revenue. So on a steady state, there is always some year you have some e-auction or let's say spectrum auction, then there will be some year some business will not come and some new business will come. So on a steady state basis, let's say over 2-3 years, can this business grow at double digit? I mean 10 to 15%, or you feel that it can grow further also?
Yeah, so far forecasting is concerned, again I just told you earlier also, it's very difficult to tell right now sitting over here what will be the growth factor today. But again that we keep on reiterating, it will be the MSTC's growth will be basically backed by e-commerce, and of course it will be a highly market driven because it depends upon the lot of the market factors also, like price of how the steel market fares, price of the scrap, etc. So it is very difficult as it now sitting on today to tell what will be the growth. But we expect that of course there might be a growth. But of course there are certain factors which is very difficult to predict right now.
I'll add here that although it's very difficult to predict the growth, but you see the government push for digital India, and all the even state government, central government, every department, every PSUs are going more and more towards the e-side, e-commerce business or development of their portals, specific portals for the specific requirements. And that is where the MSTC strength lies. So we can convert any manual process to e-commerce for giving them the desired benefit. Like we had designed a SVIM portal for IOC couple of years back. Now we have last year to ONGC and its group companies, we have delivered a similar, a portal with much advanced features for their SVIM portal. So basically the most government companies are going towards e-processing, and they want to sell all their whatever their scrap or useful things only through the e-processes. So that's where we expect that we'll be able to maintain the growth momentum, but nevertheless, the risk sectors or the other sectors like the commodity price, as DF Sahab has said, the steel prices. Naturally, if the steel prices go up, scrap prices go up, iron ore prices go up, steel prices go up. So all these things will definitely, to some extent, will add or may decrease our revenues a bit. But nevertheless, we are working hard to retain not only the old business, but to get additional business, additional clients, additional principals. Thank you.
Okay. And one last thing, obviously the opportunity in the scrap sale is huge in India, but predominantly even today we are mainly into working for the PSU. We did try in last 2-3 years for Reliance, Bharti Airtel or many other private sector also, but still the volumes are low. So what we are trying to, increase the volume, or what are the headwinds you are seeing in that segment?
Yeah, actually this year now we are going to focus more on aggregation of, the smaller industries who generate scrap on a regular basis. So we have introduced one model last year where the Industrial Development Corporation or some kind of an aggregator or some government intermediary is roped in. He acts as a facilitator for the smaller units to, channelize their scrap. So we are going for, expanding this model of business this year. And this is an area where, the thrust needs to be given, because as a PSU, especially under Ministry of Steel, we need to augment the supply of scrap for the secondary steel production. So that is going to be our focus now.
Okay, fine. That's it from my side. Thanks.
Thank you. The next question is from the line of Manvardhan Bed from Laurel Advisory. Please go ahead.
Thank you for the opportunity. So, one, I just wanted to seek a clarification. In our earnings presentation, in the e-commerce section, there is an other income of around 30 crores that's stated. So I just wanted to understand under the e-commerce section, what is this specific 30 crore item?
Basically, in the e-commerce segment, we collect this registration fees and transaction fees, etc. in our EA. So that is our other operating income from that e-commerce segment. And so that's basically the main part of that. It constitutes main part of that other income.
Okay, fair enough. Two, I wanted to understand, there was some information about Coal India setting up its independent auction platform. So any updates on that, and how will that affect our numbers if that comes up?
Coal India had actually started this portal. I mean, they have developed the portal, but it's not operational as on date. And now there are some policy changes for the sale of coal itself. So, at least this year we don't see much of a change in our coal sale. But maybe going forward, if this portal takes off in a big way, then definitely we may not be able to retain this business. But as on date, the kind of portal and the kind of customization that we can do, the service provider, whoever is preparing for Coal India, he is not equipped to handle that. So it may take, in my opinion, it's totally personal, that it may take at least a couple of years for that to stabilize.
And another thing here is from the coal segment, our earning is around 10-11 crore. So that's not a very significant earning. Nevertheless, we will be working hard for retaining that business also. But as Madam has said, they have made the portal, but they have not been able to actually use it till date. So they are continuing with our services, and now they have engaged us for making a portal for basically the specific changes that central government has mandated now. So we are actively engaging with them, and we are hoping that at least in the near future, the business will continue. Okay, thank you.
Fair enough. So third question, internally, in terms of, most platforms that we see that become successful, they have a very big portion that comes from advertising. A very big portion of the revenue comes from advertising. So what are the steps that we are taking, and what is the sort of prospect that we see on that front?
You are right. We have not yet focused on advertising. Basically, what we think is that, primarily our portal is catering to B2B segment. It's very small area where property sale are there, where we cater to B2C. So the advertisement revenue will be more in case of B2C, where the footfall is very high. We have also a very good footfall, but we'll take forward your suggestion and see whether we can get something out of advertising.
Okay. Also, so what are how do we benchmark our websites to other websites? And I just wanted to understand what is the process for that. While I understand we have a lot of capabilities in terms of understanding the complex nature of B2B procurement, but I just wanted to understand in terms of developing a website, in terms of so that it is easier for the user, etc. What are the how is that approached upon?
You see, it's not basically, what I feel is what you are trying to ask is we design the specific portals for specific customers. The website is a very generic term. Any undergraduate can make a website. So perhaps that's not your intention. Basically, whatever how the customer interacts with our portal, right? That's what we want to do.
Absolutely.
Right? So I will admit that we are not as robust as Amazon or Flipkart, because that's not our requirement. So our basically we have a large buyer base, but that also is nothing compared to the Amazon or Flipkart. So we have a customer category to whom we have to cater to. So when we design a portal, we proactively engage with them to understand their requirements and custom make the portal as per their requirements. So we make it an effort to give them a customer-friendly portal and to provide them the information what they require. Okay, but there is always a scope, and based on the feedback, we have a system where we constantly and continuously upgrade our system. I hope I've addressed your queries.
Yes, absolutely. And just the last question. I think in the last Concall you had mentioned the the website that has been made on the agriculture side, Javik. I think there were some last mile connectivity issues that website was facing. I think maybe from the end of the ministry. Has that been resolved? Is that more active now?
Not exactly. Not much progress has been made in that area. Logistics and packaging and handling is still a gray area, and the channel is not yet established. I think the market has to mature a little more for these things to, come on board.
Okay. Fair. Right. Thank you so much.
Thank you. The next question is from the line of Manish Agarwal from Arise Group. Please go ahead.
Hello, sir. Thank you for giving me the opportunity. Sir, most of my questions are being answered. One simple question which I have is, like we have made, if we look at the cash flow, the provision no longer required is 221 crore. So, could you please help me if these provisions are already in the balance sheet, because I am unable to find that.
Just now, earlier also I had just replied. It is basically a book entry because these provisions were already lying. If you see that last year's annual report, okay, if you can go through the last year's annual report, there was a note how much provisioning is lying there. So it was already sitting on our books of accounts, and we made a write-off this year, and it has a nil effect on our P&L. It is just income and the expenditure side. Both sides it is there. So that is there, nothing else. It is a book entry just now.
Okay, so I totally agree, but it was already in the books, it should be in the balance sheet as well.
It was already there in the books of accounts, and it was sitting in the balance sheet. And I give you that reference also, last year's annual report, you see the debtor schedule where it was clearly mentioned. So this much of amount, almost around same amount was sitting over there.
Okay, sir. And one more thing, sir. Is there any more provisions we can expect next year? Like, what is the quantum of provision which we can expect next year?
No. Just now we are categorically kept on saying that we are doing a staggered way, and now so far all the sticky provisions that is required for has been done away with, and we expect very, very minuscule provisions in the coming years. And if any exceptional or extraordinary event happens, that is all. Otherwise, in the normal course of business, it will be a very minuscule provisions in the coming year, very minuscule, as compared to that we were kept on the. You see that trend also. This year it is around 35 crore plus, and the last year it was around 68. So it is going down gradually. So with that, we have done away with almost all the provisioning. So again, I repeat, there will be very minuscule provision until there are some extraordinary or something again happens.
Oh, thank you so much.
Thank you. The next question is from the line of Harshad Jain from Rai Investment and Advisory. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just had a word with Mrs. Bhanuji last quarter, and she said that we are going to taper down our marketing business. But for this year, we have done marketing revenues of around 413 crore versus 406 crore. So can you please explain that why this business is not tapered down yet?
I am explaining. Just now, if you are part of that Concall, earlier also we replied to Manish Agarwal ji. It is basically a segmental part. 220 crores was written back. So that is the provision no longer required written back. That has come and sit on this particular head. That's why. Otherwise, so far, if transaction-wise, it is a very less transaction, and it is hardly any transaction. Around 160 crore transaction we have done. That too of the leftover order. Plus, we are only now engaging with that 110% BG backed procurement segment.
Just one more thing here. Will our marketing business be profitable? Because as of now, I am saying that we have incurred a loss of around 5.9 CR last year on marketing front. So will this be profitable going forward?
Yeah, as we said, we are going to have only this 110% BG back model. So there we don't envisage any kind of losses. So it is a profitable, but of course very minuscule.
And to add to that, you were seeing the losses because of that provisioning was happening. That we have tapered down our income, but the provisioning part was for the earlier years. So there was a mismatch between income and expenditure. So right now, as we had just done away with the provisioning, from the next year, whatever earnings we will have in our kitty. There will be no negative part on that per se.
Right. Thank you. And one more question would be regarding this, that why there is a need to show book entry, because even last year in Q4 we have shown a book entry of 200 crore, other income and 200 crore write-off, and this year we have shown the same thing. So will this be going forward, will it be the same trend going forward?
Because it is basically an accounting requirement. Because if you can appreciate, there is a difference between provisions and write-off. First of all, if there is an impairment of any financial asset, then we make a provision. And when we see that the recovery chances is totally zero, then we make write-off. Okay. So these are the two different things. So for that we have to make an entry, and for in the books of accounts to have a track and trace of all these things. We cannot easily we cannot knock off the entries off balance sheet and off the books.
Because the thing is that while Q1, Q2, Q3 numbers are very easy to understand, comprehend, but Q4 number, being an investor or being a trader, it is very difficult to comprehend. So I just want to know that whether the same trend will be going forward, or will be our Q4 numbers the same like Q1, Q2, Q3?
Hardly now it has done away with. Hardly we expect not much more in the coming year. But of course, again, it will depend upon if you lose the court cases and NCLT cases, so naturally there will be a write-off. Otherwise, we have done away with the provisioning. So far, the P&L effect is concerned, it is all now done away with. So now, couple of entries might come if we lose the cases. Everything is gone out of hand, and we are unable to realize a single penny out of that. That's the point.
But other than that, Standard Chartered case, no other entries will arise, right?
Standard Chartered case, there will be no entries, because we kept on saying that we already there it is sitting on our books of accounts. The entry part is okay, fair enough. So the entry part we have already shown it as a loan. And we are fighting the case. So entry part is okay. If anything of the outcome the case will happen, that will happen. It is a contingent in nature.
Case, as I read your notes, that we have already deposited around 55 CR. So just want to know that where is the book entry for this 55 CR in our balance sheet?
It is appearing in the deposit part, financial asset deposit part.
Financial asset and the deposit part.
When we publish the annual report also, you can track it down, because separate schedule has been maintained for that, and separate disclosure is already there in that schedule also, that this much amount has been deposited.
Okay. Thank you. And my next question would be to Mrs. Bhanuji. The last con call, you mentioned that MSTC is in talks with Tata Group. So any positive insight on that front?
Can you repeat?
Last quarter, you mentioned that MSTC is in talks with the Tata Group. So any positive insights on that?
Yeah, we have signed some agreements with the Tata Group, Tata Power specifically, both at Mumbai and at Delhi. And we are selling some of their old, scrap and redundant items.
And anything with Tata Steel and Tata Motors?
Yeah, Tata Group is availing our services for scrap.
Anything with Tata Steel and Tata Motors yet?
No, not really.
Okay, thank you. And my last question would be, is there any proposal to change the name of the company? Because as Mr. Sundar Kumar sir already mentioned it somewhere, because as my humble opinion, since we are predominantly a e-commerce player and most of the profits come from it, so I think our name should fall in line with the work we are doing.
No, name is fine, because now our name is MSTC, not scrap basically. Previously it was metal scrap, right? Now it's not that. Now we are known as just MSTC, so no abbreviation and that kind of thing. And MOA, we are in the process. We are will be doing something for reflecting our business in terms of whatever we are doing and whatever we are aiming to do. So that we are already under process, and it's a long process. So we are working on that.
Because investor presentation considers us as a scrap company, which is not helping us to re-rate our company and our valuations.
Okay. Right. I mean, that we understand. So, it's a slightly different segment in which we are. We are basically not a IT company also and not a trading company also. So, but naturally, we need to change our MO. We'll need to change our MO. We are basically doing whatever business assisted by the IT tools.
Yeah, because I am being an investor in the company since past 2 years, and what I felt that market is not recognizing you as a pure e-commerce player because our name is Metal Scrap Trading Corporation, MSTC. So my humble suggestion would be if we can go for our name change, which can define our work that we are e-commerce player. That would help us to re-rate our company much better.
We'll taking your sentiment, we'll proactively think about it.
Sure. Thank you so much.
Thank you.
Thank you. The next question is from the line of Shreyans Jain from Apex Capital. Please go ahead.
Yeah. Am I audible?
Yes, sir, you are.
Yeah. So what I wanted to ask is the cash on our books of roughly 800 crores. What part of this 800 crore belongs to the shareholders and what part is, maybe customers advance or something?
It's a very simple thing. This is clearly defined in the company's act. What is the shareholders part? It is a equity plus reserve. It is a net worth. It is a shareholders part. It is one part of it, answer of it. And second, if you look at this our balance sheet, which has been published yesterday, so basically you see there is a one way it is sitting in the cash and cash equivalent and other cashes as a current asset, and there are current liabilities also. So if you net it off, so it is around 1.07, 109. It is a current ratio. So the answer goes as simple as that. That more than that working capital, that is the net cash that is lying. That is the thing. That is the simple thing. And so far equity is concerned, your equity is there. Share capital plus investor surplus. It is clearly disclosed in the balance sheet. It is clearly disclosed in the balance sheet what part of it is my current liability, and our cash part becomes part of our current asset. So it is a part of our current asset and what is my liability, current liability. So it is clearly disclosed. No ambiguity per se as such.
Yeah. Okay. All right. Thank you so much.
Thank you very much. As there are no further questions, I now hand the conference over to the management for closing comments.
So, thank you all our investors who had shown the interest in the company's financial. I can only assure our investor community that the company with its all dedicated manpower is working hard and helping the government to convert their processes to e-commerce and earn revenue in our effort. So those the revenues that we earn, if you see the volumes and the service income, so you see the service charges are small. There are many transactions where we get very less service charges, and there is always a pressure for reducing the service charges. But nevertheless, we are able to maintain the growth, and we are hopeful. Unless otherwise something drastic happens, we'll be able to maintain the growth momentum for the company. For all three companies like MSTC, FSNL, and as well as our joint venture company, MMRP. Thank you.
Thank you very much. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.